In this video, I'm going to be sharing with you the strategy which made me 1 to 13 RR in one trade. I will be showing you the key levels that I wait for and I look for in the market to take the trade from. Using those key levels and confluences that I'm going to give you in this video, you will be able to identify high probability setups that have a very high win rate. I will be also sharing with you the settings that I use for my indicator, so you will be able to use it in your trading. This video will make you see the market in a different way. You will just remove the blindfolds from your eyes. So let's get into it. I'm gonna start from the beginning, which is right here. First thing we're gonna do is I'm gonna show you the settings that I use for my indicator. Basically, these settings, you can stop the video and copy them, but these settings are for if you are using S&P futures, okay, like ES1 or the futures contract for this month. While if you do not have those, if you didn't purchase the real-time data, then you can go ahead and use the S&P, okay, and then those will be the settings for the S&P. It's just 1 hour before, okay. And I don't usually have them all ticked. I adjust it based on the session, based on what I want to see in the market for the day. So having said that, let's go into the chart. I will be only using the 15 minutes and below as I do on all my previous videos. And if you haven't seen already what those lines represent and how I use them, go ahead and watch my previous videos. I'm gonna put one of them up here so you can see it. First thing we can see is the market is making higher highs, of course. And always market structure is the first thing you're gonna have to identify with any strategy. These are the basics, okay? So as we can see here, the market is making higher highs. This is the high right here, and then we make the swing low, and then we make another high right here, okay? And then the market pushes lower, okay, resulting in a break of structure right here. Okay, this is one sign. Now let's use our confluences that we know about the market, which is this is the New York Stock Exchange, this is the New York, and we actually break structure, giving us a sign that the price wants to go lower. Okay, but why it wants to go lower and where it wants to go lower? As we can see here, this is Asia open and this is New York midnight. And the New York opened really far away. We also have all this liquidity right here, resting right here, okay? Look at the 15 minutes. This was the 5 minutes, so this is the 15 minutes. As we can see, there's also imbalances right here, all the way down, imbalances right here. So now the market gave us an actual sign that it wants to go lower, okay? And we have these as targets. We also have the London close as target, and we have the sell side liquidity. Our first target would be here. But now knowing that, understanding that, and seeing the signs that the market gave us, how could we use that to our advantage? How can we find our entry? You can look at the chart and try to see yourself, how can we find an entry? Let's move slowly and see what are we gonna wait for, okay? So what I would first do is put my fib from the high to the low and identify my OTE level, which is between the 60 and the 79, and see if it aligns with any of my session open, okay? And based on that, I can actually identify my areas, okay? And here, right here, we kept going lower, actually. So this is now my range, and this is the fib, okay? Confluence number 1 is that we have the target right here. And confluence number 2 is we broke structure. We have also impulsive moves downwards, okay? 2 confluences. Second, we made actually a failure swing right here. Okay, sorry, this is third, a failure swing. So now we understand that we want to go lower. This is the 618 level, and this is the first area we can look for, and the second area aligns perfectly with the other session, okay? Also, there's an imbalance before it, a fair value gap right here. So this right here is a very high probability area. So we are just using all we know about the market in order to find the best area to take the trade from. We could be wrong, of course, but this is our edge. So as you can see here, this is our area. which has a fair value gap. Now we wait to see if the market will retrace back. Another thing as a confluence is that the target 618 aligns perfectly with the target that we have. Okay, so this is another target that we can actually take into consideration. Now we wait and see if the market wants to retrace back. Okay, so this is now a range. So this is now a range right here, same thing. Let's see if the market will retrace back, and it does. Whenever we reach this area, we are on the 5 minutes. Let's go. You can be actually aggressive and take the trade from here, but it depends on you. I would actually like to go to the 1 minute and see a reaction from the area. And as we can see here, this is a build of liquidity like that. We break it, okay, and then we can use our fib right here in order to take an entry from the 618 position and put our stop loss above the high. Okay, but before we do all that, I just want to show you that the market is made the last high right here, and then we broke it. Okay, and this is our sign that we are gonna go lower. This is our edge. We can take our entry from here, fair value gap, fib, and our target is like we spoke about. We have the 272 right here, and we have Asia open. We have the 618 fib with midnight, or we can also actually target the lows, which is the sell side liquidity. Okay, now let's go back to the entry and see what happens here. So we can actually take the trade from here. When I took this trade, I had my stop loss right here. Okay, because I went to the 1 minute and I saw that this whole order block right here from here to here. Okay, I saw all this as an area that the price could retrace to, and it will still be valid, so I put my stop loss right here. So you can use either stop loss above or stop loss above this or above this, and you'll still have a great risk to reward. And as we can see, the price retraces back. This is the beauty. This is the, as we can see, the fib right here. It retraces to our area. Our stop loss could be above the high and it will still be in the trade, unless if we have spreads, so we put it a little bit higher. But definitely it would be higher than the New York Stock Exchange, New York Open right here. And the price just goes lower right away. Doesn't stop, it just goes lower, as we can see. So first area for us to take profit is this area and this area. Okay, and as you can see, the price stopped right here. So if you are already in the trade and you will see this momentum change, then you might take some profits, and then the price also goes down and removes the sell side liquidity. I want to show you where would the price stop. Okay, why would it stop where it did right here? And if we zoom out, we can see, look at this right here, the cluster of openings, the liquidity, which caused all the move up. This is the sessions open. This is Asia. This is London. Here is the midnight. And this is why the market stopped here at this position. Okay. So when you start seeing those levels, that it's nothing. These indicators, these sessions are just showing the market open, the price of the opening of the session. And this is where most of the liquidity is staying. And just by being able to see it as key levels, we can identify those, and we can just understand where the market is heading and where we're going to see the volume coming from, where we're going to see the orders coming from. So right here, we also have the fair value gap, and we have the midnight close. Okay, so the market could react from this area and could keep on going. But if it actually kept on going, it could give us an indication that it's gonna keep going higher. Okay, so it does stop right here, as you can see, and the price just keeps going higher. So it stopped right here. It's like, let's say, a gas station that you have to stop, put some gas in, so you can keep on going. And that's exactly what happened. So this is a confluence that happened also. If you notice, this is the New York Stock Exchange open, and it went down to here, the order block, to the New York, and as we can see, so basically this is also a setup that we can use. This is a liquidity grab, which actually came to the New York open, and then the price broke the high, which is the swing high right here, and we can see the retest, and it goes higher. Okay, so it could go higher where? To our area right here. Okay, which started to move downward. So we can see this all buy, sell. Okay, so probably the market will retrace, will go back up there in order to take the orders which move the market lower. And this is the beauty of this indicator, is just it shows you the places where you should put your attention on. Okay, this is one of many ways that I use this indicator with. I have so many other strategies and so many things that I've seen during the time I've been using it for around 3.5 years. The next video I'm gonna show you so much more info about it, what I've learned, so you will be able to benefit from it. I hope you found value in this video. If you did, please subscribe and like the channel. And if you want to learn more about this strategy and this indicator, you can go ahead and watch this